Hello everyone. Welcome to the Stock Minds web channel. ASML Holding, NASDAQ, ASML impressed markets in Q2 2025, delivering robust revenue and earnings growth. Despite geopolitical headwinds and cautious guidance, the company's dominant position in lithography, strong free cash flow generation, and long-term secular tailwinds in advanced semiconductors make it a compelling investment. In this video, we will dive into ASML recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About ASML Holding. Founded in 1984 as a joint venture between Philips and ASM International and spun off into an independent company in 1995, ASML is headquartered in Veldhoven, Netherlands. It is the world's premier supplier of photolithography systems, machines that pattern dreams onto silicon. Notably, ASML holds a near monopoly in extreme ultraviolet EUV lithography, selling the only tools capable of manufacturing cutting-edge nodes used in AI, high-performance computing, and mobile chips. With over 44,000 employees across 60 global service centers, ASML generates over $30 billion in annual revenue. ASML financial performance. ASML Holding delivered impressive financial results in Q2 2025, signaling strong operational momentum and profitability. The company reported quarterly revenue of $9 billion, up 34.57% from $6.68 billion in Q2 2024, driven by robust demand for its advanced lithography systems. Earnings per share (EPS) also surged by 64.47%. Reaching $5.23 compared to $3.18 in the same period last year. On a trailing 12-month TTM basis, revenue grew 38.13% to $37.65 billion, while EPS rose 53.32% to $28.12, showcasing ASML's ability to scale profitably. Free cash flow per share (TTM) experienced a dramatic increase of 246.79%, climbing from $7.95 to $27.54, underscoring efficient capital generation. Profitability remained robust with a gross margin of 52.52%, net profit margin of 29.27%, and free cash flow margin of 28.47%. In terms of returns, the company posted an impressive return on assets of 20.99% and return on equity of 58.25%, while maintaining a conservative debt-to-equity ratio of 0.21, reflecting strong financial discipline. Over the past 5 years, ASML's revenue has been growing at a 20.4% CAGR, net income at 24.2%, and free cash flow at 22.8%. This shows that ASML has been a fairly consistent performer in the past and is still projected to grow in the future. ASML Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue at $37.44 billion, up 27.22% from 2024, and project non-GAAP EPS to grow 38.96% to $27.84. Analysts assign a buy rating with consensus price target of $847.83, representing a 13.82% upside potential, with the highest target reaching $958.73, or 28.68% upside. These figures highlight the company's strong financial foundation and continued growth trajectory. ASML stock price performance and valuation. At the time this video was created, ASML stock is currently trading at $744.91 per share, reflecting a 20% decline over the past year, which underperformed the broader S&P 500's 12.7% gain during the same period. However, over the last 5 years, ASML has delivered a 94.1% return, closely in line with the S&P 500's 95.2% increase, indicating a good long-term performance. Because of recent pullback, the stock remains fundamentally attractive. It offers a modest dividend yield of 0.79%, appealing to income-focused investors. From a valuation standpoint, ASML trades at a price-to-sales (PS) ratio of 7.85 TTM and a forward PS of 7.86. The non-GAAP price-to-earnings (PE) ratio stands at 28.04 with a forward PE of 26.88, while the price-to-free cash flow (PFCF) ratio is 27.33. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS is below the average, the forward PE is below the average, and the PFCF is significantly below the average. This suggests that ASML might be undervalued, as it is still projected to grow rapidly in the future. ASML growth potential. ASML growth prospects remain strong, driven by several factors. 1. EUV dominance and high NA innovation. ASML's monopolistic position in extreme ultraviolet (EUV) lithography technology remains a cornerstone of its growth potential. The company is the sole supplier of EUV systems globally, which are essential for manufacturing chips at 7 nanometers and below. This technology enables the production of advanced AI chips used by companies like NVIDIA and Apple. The introduction of high-NA EUV systems represents a significant technological advancement. ASML shipped its first TwinScan XA5200B system in Q2 2025, with these systems expected to triple in revenue from €465 million in 2024 to €1.7 billion in 2025. High-NA technology enables chip manufacturing at 2 nanometers and below, crucial for next-generation AI applications. 2. AI-driven semiconductor demand. The surge in artificial intelligence is driving unprecedented demand for semiconductors, and ASML stands at the center of this technological shift. AI is expected to serve as the primary catalyst for growth in the semiconductor sector. Industry forecasts project that global semiconductor revenues will surpass $1 trillion by 2030, a clear reflection of the accelerating adoption of AI-focused technologies. Major hyperscale technology companies, including Amazon, Google, and Meta, are responding to this trend by significantly increasing their capital expenditures for 2025. Collectively, their CapEx for 2025 is set to reach $392 billion, with approximately 44% of this investment directed toward AI-related infrastructure and projects. This massive commitment highlights the crucial role AI will play in shaping semiconductor market trajectories and reinforcing ASML's strategic position in the industry. 3. Long-term revenue projections. ASML has outlined ambitious long-term financial goals, aiming to achieve annual revenues between €44 billion and €60 billion by 2030. This target represents roughly a twofold increase compared to its current revenue, highlighting the company's strong growth potential over the next several years. Alongside revenue growth, ASML plans to improve its gross margins to a range between 56% and 60%, reflecting anticipated operational efficiencies and higher value product sales. The company expects this expansion to be driven primarily by sustained and growing demand for semiconductors fueled by advancements in artificial intelligence, as well as continued transitions to more advanced chip manufacturing nodes. These next-generation technologies require increasingly sophisticated lithography systems, reinforcing ASML's critical role in the semiconductor supply chain and supporting its long-term growth prospects. Risks to consider. While ASML looks like a compelling investment opportunity, we should be mindful of potential risks. 1. Regulatory and geopolitical risks. ASML operates under stringent export controls, particularly between the US, Europe, and China. Export restrictions on advanced EUV lithography machines limit market access, especially to China, which reduces growth opportunities. Ongoing geopolitical tensions and trade disputes could disrupt global semiconductor supply chains and regulatory environments, complicating ASML's operations. 2. Technological challenges. Maintaining technological leadership requires massive R&D investments. The transition to the next phase of EUV lithography, high-NA EUV, presents execution and innovation risk. Moreover, emerging technologies, such as quantum computing or alternative chip manufacturing methods, may threaten ASML's dominant technology position over time. 3. Industry competition. The semiconductor equipment industry is intensely competitive, with rivals developing alternative lithography technologies and next-generation solutions to challenge ASML's dominance. This growing competition may exert pressure on ASML's pricing strategies, market share, and overall profitability. As competitors innovate and offer different approaches, ASML must continuously advance its technology and maintain strong customer relationships to stay ahead. Failure to do so could result in reduced revenues and weakened market positioning. Conclusion: ASML Holding's strong Q2 2025 performance highlights its solid financials, industry dominance, and long-term growth potential. Despite a recent 20% stock decline, its leadership in EUV technology, rising free cash flow, and strong margins support its valuation. With growing demand from AI and advanced chip manufacturing, ASML is well positioned for future growth. While short-term risks exist, the company's fundamentals remain strong, making it an attractive long-term investment opportunity in the semiconductor equipment sector. But remember, this is not a financial advice. What do you think about ASML Holding? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.